So I'd say that the headcounts can be interpreted in a couple of different ways. So the first is the way that you gave, in the fact that there's been a massive acceleration in hiring over the last few years, and in response to a slowdown that has been alluded to by many firms across the industry, sort of cutting back on costs is a prudent way to move forward. But in other cases, there are businesses where through time they have been very sort of cost conscious, so they've been investing for growth at all costs, and for that reason have fairly weak profitability relative to where investors perceive they should be. And so in those scenarios, the cost cuts and the layoffs are more fundamental and a bigger step towards profitability, and actually have been taken quite well by the market. And I think the final point to add on job layoffs is that these tech giants that are laying off employees are essentially tech conglomerates. And so tech layoffs across the board look like scary numbers. But if they are in parts of the businesses that are structurally weaker or perhaps in decline, that is less concerning than if we have job cuts in, say, the higher growth areas of the business. And in someone like Microsoft's case, that would be an area like Azure.
So this doesn't necessarily change too much then when it comes to the world of innovation and growth then, does it then, Paddy? Because they've invested quite a lot. I mean, in general, it's a sense of like $100 billion or so spent on what is an unknown future, I suppose, for the most part. But AI, the metaverse, really all being key elements that these tech companies have put money into. These job cuts don't necessarily change that focus, do they?
I wouldn't say so. I think they're focused. They are likely to be focused, I should say, on areas that are structurally more difficult, whereas the big tech companies are still willing to put money and resource behind areas they see as the key growth opportunities going forward. And I think the Microsoft investment in OpenAI is a really clear example of that. At a time when they're cutting jobs across the business, they are also looking to invest in the future.
Paddy, it's Arjun here. I just wanted to get your take on the upcoming tech earnings season here as well. As you look across the board over the past few months, we've seen the market really sort of pare down its earning estimates, slash some of those. But as we look at the reports that will come in over the next few weeks from Q4, the December quarter, are those estimates still too optimistic? Is there a chance here that many of these companies miss again and disappoint the market?
So as ever, it really does depend on the companies in question. But as we go into this result season and as we go into, say, the software part of the tech industry, there's definitely a lot of concern out there as to essentially how bad it will get. There have been lots of worries around, again, for example, with Microsoft, there have been lots of worries about cloud computing and how companies and customers will behave in the more difficult macro environment. And we've had a lot of stories about clients looking to optimize their cloud workloads, looking at slower migrations. And for that reason, there's a lot of ambiguity as to how rapid the slowdown in software growth will be in the coming quarter and year. So it'll be really interesting to see what the companies have to say around how bad it is near term.
And so how's the market sentiment right now towards big tech? Is it a case of saying, well, yes, we know the Q4 numbers, and even this quarter we're currently in might be a bit difficult, but the cost cut should feed through, and that should help profitability in the coming quarters and somewhat of a turnaround. Is that how people are thinking about it, or is there still a little bit of caution going forward?
I think there's definitely a bit more caution than that going forward. People are looking at not just the next quarter, but what 2023 will hold and how IT and software investment will fare through a more difficult macro period. So I think whilst it will be good to get a bit of clarity near term around growth rates and the support will come through on the margin side from layoffs, those questions will persist beyond this quarter. My own view is that whilst it may get more difficult near term, but again, for a company like Microsoft, the longer term outlook for them is particularly attractive given the growth rates of Azure and the low penetration of cloud computing and how that can help the company to sustain double-digit growth going forward.